low oil prices certainly giving truck leasing company Ryder a boost, surpassing Wall Street expectations in its fourth quarter results.
Yeah, joining us right now in a CNBC Exclusive, we welcome Ryder System CEO Robert Sanchez. Good to see you. Welcome back.
Great to see you, Bill.
Is it the economy that's helping you, giving you that tailwind, or is it the lower price of oil? Tell us how that quarter went.
Well, fuel at Ryder is we resell diesel fuel to our customers, so it's primarily a pass-through with a fixed dollar markup. So fuel has not really impacted our earnings much. It's really been the economy. As the economy in North America has improved, we've seen our customers expand, and we're getting the benefits from that. And then also there's a secular trend in our business. We're in the outsourcing business. And as the things that we do around fleet management and supply chain have gotten more difficult for companies to do on their own, we're seeing more and more of those companies handed over to companies like Ryder so that we can take those functions over for them.
And as that happened, Robert, what can you tell us about the second day now of this oil strike? How significant is it? Any hit to your business?
There hasn't been. I mean, I think the big story for us is that the drop in oil prices over the last 6 to 12 months has put a lot more money in our customers' pockets. It has allowed them to invest in their business. And then obviously our customers, the consumer, has also gotten a benefit from that. So the shorter term move up, I think we're still well below levels that we were at just 6 months ago.
Give us a sense of the sectors you are talking about that are benefiting here, that you see them outsourcing more to you right now. I mean, you know, we went through this last quarter, the one before that, we were at 5%, we were told, on GDP. Then it was 2.6%. So we've seen a slowdown, but obviously some of your customers are benefiting in the meantime. Who are they?
Yeah, we're seeing freight movement increases across most industries, whether it's food business, food distribution business, the housing market, really a lot of the markets that are driven by consumers. We're seeing those have a lot of activity. So if you look at freight movement over the last couple quarters has continued to look strong, and we're forecasting that to continue as we get into 2015.
And Robert, what about innovation in the sector? And do you view companies like Uber and even Amazon as potential partners or significant partners or competitors?
Absolutely. I think they could be partners. They could be competitors. A lot of our business is now moving towards more innovation and finding new ways to help customers be more efficient. So we have new products that we've introduced in the market. We're now doing, we're going to be providing maintenance to some of the larger truck fleets in the country that we have not historically done before. We've got a very strong presence in Mexico, so as more companies begin to assemble and move some of their manufacturing to Mexico, we're very well positioned to help them there. So clearly there's a lot of new innovation coming into our industry sectors and again, into companies like Ryder.
Would it make sense to go to alternative energies, to a more green system, as some companies are doing? Would that, I mean, you mentioned diesel as the fuel of choice here. What about you know, some of the hybrids that are out there right now?
Right. We have been leading the way with natural gas vehicles. We currently have, between what we have on the ground and we have on order, we have about 1,000 natural gas trucks in our fleet. We've driven over 30 million miles with the natural gas trucks, and we are now in just about 10 different markets and expanding from there in 2015. So we are leading the way by helping our customers get into natural gas trucks. That is a much greener technology, 25% less carbon emissions, and a much more stable fuel in terms of the price. So as diesel prices go up and down, natural gas is a much more stable fuel.
I'm laughing to myself right now because I read that statistic in the notes, and I thought they were talking about natural gas trucks that you were transporting, not you were fueling your trucks with. Now I get it. Okay.
And I'm curious, Robert, on that point, if you can just briefly tell us before we let you go, how sensitive are your earnings to, say, each $10 move in oil prices?
They are not impacted much because, as I mentioned, we resell about 280 million gallons of diesel to our customers. But we pass through most of the cost, and we just have a marginal markup on it to handle the cost of moving the fuel. So very little impact on the bottom line when the price of fuel moves.
Yeah,